Stock futures surged on Monday night following U.S. President Donald Trump's unexpected decision to pause the planned tariffs on Canadian goods, an announcement that came just hours after the administration also postponed tariffs on Mexican imports, fueling investor optimism and boosting global markets. The move marks a significant shift in trade policy, as tensions over tariffs had been a major source of volatility in recent months, causing uncertainty for businesses, consumers, and financial markets alike. The stock market reacted swiftly, with S&P 500 futures rising by 1.2%, Dow Jones futures climbing by 1.5%, and Nasdaq futures jumping by 1.7%, reflecting renewed confidence among investors who had been bracing for economic disruptions due to trade conflicts. The decision to pause tariffs came as a surprise to many analysts who had expected the Trump administration to continue its hardline approach on trade, particularly as it sought to pressure neighboring countries into renegotiating trade agreements under the United States-Mexico-Canada Agreement, USMCA, which replaced NAFTA. The administration's initial stance had been to impose tariffs as a leverage tool to force concessions, but mounting economic concerns, pressure from U.S. businesses, and political calculations ahead of the upcoming presidential election likely played a role in the sudden change of course. This pause offers temporary relief to businesses in key industries, including automobiles, manufacturing, technology, and agriculture, all of which rely heavily on cross-border trade. Automakers such as Ford and General Motors, which source critical parts from Canada and Mexico, saw an immediate boost as stock futures climbed, easing concerns that tariffs could increase production costs and disrupt supply chains. Retail giants like Walmart and Target, which import goods from Mexico, also stand to benefit from the decision, as it prevents additional price hikes that could impact consumers. Similarly, technology companies that depend on supply chains extending into Canada and Mexico welcomed the decision, as higher tariffs could have led to increased production costs and potential supply disruptions. The agriculture sector, which had already suffered from retaliatory tariffs in previous trade disputes, breathed a sigh of relief, as farmers feared new tariffs could negatively impact exports. The immediate market reaction underscores how significant this decision is, with futures pointing to a strong open on Wall Street, as traders reassess the economic landscape in light of the tariff reprieve. However, market experts caution that this relief may only be temporary, as the Trump administration has a history of abrupt policy reversals, meaning the risk of tariffs being reinstated still lingers. Many investors remain wary of potential policy shifts that could reignite trade tensions, leading to another round of market volatility. The broader economic implications of this decision suggest that while investors may welcome the tariff pause, long-term stability in trade relations remains uncertain, particularly as negotiations between the U.S., Canada, and Mexico continue. The political motivations behind this decision also cannot be ignored, as Trump has built much of his economic policy around renegotiating trade deals to favor American interests. With an election on the horizon, ensuring market stability and maintaining economic growth are likely key priorities for the administration, leading some analysts to speculate that the tariff pause is more of a strategic move rather than a permanent shift in trade policy. Businesses and consumers will closely monitor further developments, as a sudden resumption of tariffs could lead to another wave of economic uncertainty, impacting everything from stock prices to consumer goods costs. The decision also has broader implications for global trade, as it signals a potential softening of the aggressive tariff strategy that had characterized the Trump administration's trade policies, particularly with major trading partners such as China and the European Union watching closely. If this pause extends into a longer-term resolution, it could pave the way for more stable international trade relations, helping businesses make long-term investment decisions without fear of sudden policy changes. On the other hand, if tariffs are reinstated in the near future, markets could see another sharp downturn, particularly in industries that are highly sensitive to trade disruptions. Many investors are now turning their attention to the next steps in trade negotiations, as officials from the U.S., Canada, and Mexico continue discussions on trade policies that could shape the economic landscape for years to come. The Federal Reserve is also watching these developments closely,